and that sound means we are now live here on our YouTube channel. It's our halftime report, the daily show we put together where we go through the news, the markets, looking at the charts, look at economic data, analyze commodities, currencies, individual corporate news. Have some fun while we're doing it, breaking all that stuff down so that you guys can out there better run your daily routine. Welcome out. We've got a full panel of coaches here today from Tackle Trading. We've got Coach Matt, Coach Greg Old Money Holmes back to bring some of that old money wisdom, and Coach Tyler Craig as well running screens. We're going to go through markets here in just a minute, and I am your host, Coach Tim Justice. But first off, as always, as you're coming into the chat, hashtag Team Tackle right in there. Let's have a positive, light, and fun conversation here today. Anything you guys are curious about, let us know. Happy to handle some of those questions as we go through the show as well. We're going to be doing this every day for a long time until we get the word out on this new product and this new podcast we have. I do want to mention the Huddle Podcast. This week we've been putting the audio out there behind the podcast, releasing it. You can subscribe, you can download, and you can be a part of that on iTunes, any of your favorite podcasting apps. It's also on Spotify. But as Coach Tyler has brought up here as well, we also have it right on the front page of Tackle Trading through the website. And Tyler, as you look at the huddle here, there's several things. Number one, we put together the top 5 stories every day, curated by the coaches over here at Tackle Trading. We have a writing meeting the day before. We go through and we compose all that stuff. And then we do this quick write-up so that people can get the most important and relevant news in like 5 to 10 minutes. So if you've got the audio and you're on the go, you can obviously listen to the audio through the podcast. It's just the same copy and audio is there just to kind of support you guys out there. But it allows you to kind of get prepared for the halftime report, go through this 5-10 minutes, then come over to the halftime report and continue the conversation for the analysis and the insight that we can provide over here as coaches. Matt, anything you want to say about the huddle here? Help us get the word out on this exciting new product we have here at Tackle Trading.
No, very simply put, Tim, very excited about the huddle. It allows our community to stay on top of the market, to get the most important stories on a daily basis. And like I said, we're very excited about it. We hope you enjoy it. And if you do, 5-star reviews and share the word. But that's
Those 5-star reviews can help. If you are Team Tackle, get over to the iTunes, do it directly through Apple. That does help us get the analytics and the word out on the show. Tyler, this is the kind of thing that if I was brand new, I would have loved this. I would have wanted it. I would have eaten it up. And at any point in my market journey, to have this kind of content really quickly right at my fingertips, pretty valuable stuff, don't you think?
Yeah, well, and it's not being compiled by bozos at news outlets. It's being compiled by traders. So you're getting the perspective from a trader as to what is the most relevant news, which I think gives you a little bit different spin than other sources.
Yeah, I agree as well. All right, let's get into market analysis here. Actually, as what the huddle is talking about right there on the front page in the first story, the market did start to sell off earlier today on the Powell commentary that he mentioned. Basically, at some point in the future, if everything goes well, the economy recovers as they expected, they will stop buying bonds and supporting the economy and the direct measures they have. Well, that's kind of obvious news. In my perspective, the market started selling a little bit on that on the futures, open about 6:30 my time. But then here we are intraday. We are battling back, trying to hold the 50-period moving average. Tyler, technical read here. What are you seeing in this chart?
Look, if you looked at this 2 hours ago when the market opened, 3 hours ago, it was kind of nasty. I think you got to be a little bit encouraged by the rebound. There's quite a bit of divergence between what the S&P looks like and what the NASDAQ looks like in small caps, which we'll get into here in a second. But I do like how this is holding the 50-day moving average. Keep in mind, we did gap down a little bit. So when you look at the ETF, you're going to see a little bit different read on the candlestick, which honestly, Tim, if you want to be a little bit more optimistic, look at SPY. It's got a nice green candle for you. Mm-hmm. ES, you don't see that as much. But it does show what happened since the cash open. We sold off right off the bat, but are rallying back. And now at the high of the day, intraday. So bulls are putting up a stand here, and you're seeing a lot more strength in small caps today. So look, I mean, we're down quite a few bars in a row. So we'll see what happens through the rest of the day. But so far, so good, I say, for a bottoming attempt to this downswing.
Mhm. Greg, I read the rookie blog that you put out there today, and obviously that's a very popular one within our community. A lot of beginners get a lot of value from that. You're starting to see some chop and some consolidation, specifically in some of the areas of the market that you're watching. Knowing you as well as I do, I'm guessing you're approaching it with dividends and cash flow and cover calls, the way that you approach many, many market conditions. What are you seeing in these markets, and how are you treating them right now?
Yeah, so I wrote that rookie blog yesterday, and then it was strictly about the pain of consolidation for a lot of traders. We've been spoiled recently because we had a pretty aggressive move, to the upside in just the general markets, especially with some of those SPAC type stocks, and just kind of some, almost like a frenzy there for a little while. And now we're, excuse me, now we're getting that more of that sideways chop that makes it tough for bears and bulls alike, right? So. The thing that I talked about in the rookie blog, and it's the thing that I do now, is I kind of look at a few different things. I want to know, okay, how much is the bias changing? Like, to what degree is it changing? What is my new bias, and what do I need to do to be in tune with that, right? So my posture on the market. One of the examples I used was last March. We went from crazy bullish to crazy bearish within 0 to 60 is what it seemed like, right? Well, we're not seeing that same thing now. We're seeing this turnover, so to speak, a little bit of a pullback, like Tyler said, 5-6 days in a row. We're at some support levels, some very key support levels. I'm watching that 50 very closely, which most traders are. And so instead of doing that knee-jerk reaction from bulls to bears, now you've got to do that. You've got to look at it a little bit differently and say, okay, well, maybe we're not bullish anymore. Maybe we're now, closer to neutral. Maybe just, push into that -1 area. What you got to do is look at your bias and then get your portfolio to match that. And that's really what the rookie blog was all about. And it's exactly how I approach the markets as well. When I see change, I try to quantify that change, and then I try to match it to my portfolio. Some of the easier ways to do that: cover calls, right? So if you've got open stock when it's running up bullish and you start to see a turnover, you can throw some cover calls on. That's going to bring your delta down to a manageable level, so that if the thing gets aggressive to the downside, it's not going to crush your portfolio. So, you really got to look at the market objectively, see what the change is, see where you stand with that change, and then make the adjustments accordingly.
Mhm. And Greg, your audio is a little bit lighter than Tyler's. If you can just pull that mic in a little bit better. I heard you just fine, but just for the next one, see if we can pull that in just a little bit. I'd appreciate it. And for me, the S&P 500, though, Greg, I mean, I'm seeing consolidation in some areas of the market. I know the chop is here. We've been putting in lower candle highs and lows for 4 days here, Tyler. So you have to respect that here in the marketplace. The S&P is pulling back into the 50-period moving average. It's a very different read than what I'm seeing in the NASDAQ and the Russell, though. So we're starting to see those consolidations work differently across different indexes and sectors. And Tyler, if you can, and then I want to get Matt's commentary and thoughts on the whole broad market. Can you quickly just flash through the indexes to give some context as to what we're seeing as separation between them?
Yeah. So if you look at the S&P, you would just say, oh, what's all the fuss about? It's a garden variety pullback to the 50 MA. Well, yeah, but underneath the surface, you take a look at small caps, for instance, and these, which thank goodness they had such a big rally before this. This would be a lot worse if we started from a lower level. But percentage-wise, we were off, I don't know, 10, 11, 12%. That's not insignificant. Like that's a pretty substantial pullback. Broke the 50-day moving average. Yesterday was gross. This morning looking gross again. I think this was down like 1.5%. So off the lows, I mean, we're seeing pretty big volatility here. So you look at the magnitude of the rebound. The S&P is basically unchanged on the day. This is now up 1.5%. That's the type of bullishness. That's the type of strength you like to see to give you some confirmation, some evidence that buyers are showing up and finally buying this. I think, we'll see how it goes. This could be the end of the downswing and the start of some kind of bounce. The challenge, though, is this is not a higher pivot low. You're below the 50-day moving average. This is not a garden variety pullback, easy by the dip opportunity. It's a little messier now. So you start to look at this and it's like, well, this is exhibiting, to Old Money Holmes's point, more range-bound consolidation type of action. I'd be a little nervous if I was short this thing. after being down this many bars in a row. If you're bullish and you've been beaten up, today gives you a bit of a reprieve. Got to get back above the 50-day, but I personally like what I'm seeing here much more than if we were talking 2 hours ago. This has been a pretty good improvement.
And obviously small caps have been the one who's taken it on the chin, so heavily dependent on energy and oil companies, and oil has had quite a bit of volatility here. We'll get into oil here in just a minute, but the NASDAQ as well, though. I mean, Tyler, this is before the recent sell-off, because it had its 10-11% sell-off there early in February, but it's not necessarily developed into anything but consolidation since then. We're still stuck in this range, so we are seeing some of that price action kind of playing itself out in that regard. What are you seeing in tech here?
It's a mess. It's a mess. I mean, I was hoping that the best case scenario would have been kind of an inverted head and shoulders pattern here, looking for it to break the highs. Could have happened. It didn't. Now you've essentially broken this prior minor pivot. It's a mess. It's just choppy and messy, which is why swing trading is so hard right now in the NASDAQ, as well as really just across the board. I don't know. I don't tend to read too much into any individual candlestick when you're in the middle of chop. It's almost like, look, set an alert. If this can break back above the 50-day moving average, it's game on for bulls. Until then, it's just messy. I mean, on the downside, you have this lower level here, which I think is the downside target if bears press their advantage. But this chart looks completely different than the S&P and IWM, and it's just messy, which is why you can't find much in tech to do right now until this picks a direction. But yeah, in the short run, it's unfortunate that it broke that little pivot, but I don't know what to make about today. It's just a one candle in the middle of a range. I wouldn't read too much into it.
Matty, how are you reading these broad market conditions just in general, across any of these indexes, just price action?
Two things. Number one, from a bigger picture perspective, it is difficult right now. There's no doubt about that. But one of the difficult things about the market right now is in those typical bull markets where all indexes are trading with one another, time frames are aligned, the market becomes easy because it discounts negative news. It doesn't care about that negative news. It says, oh, some ship blocked the Suez Canal, so what, we're going to be good 2 days from now, right? In a volatile market, it uses those moments in time for emotional decisions, and so you see volatility increase, and you get random price movements, and it simply becomes a more difficult environment in general, both from the investor standpoint all the way down to the day trader out there. And so we are stuck in the muck a little bit right now, and I do feel, even with today's price action, even with the chop this week, I don't think we're there yet, but I do think, like I said yesterday and the day before, I think we are closer to getting those time frames aligned. We just got to, be a little patient in letting these markets really kind of establish themselves. But that's more from a bigger picture perspective. Now let's look at what I'm looking at today and what Tyler and I were talking about right before we went into the show. And that's what I think is the important technical data today. When you're looking at the S&P 500, which again is the barometer of the marketplace where we set our entire bias to, which is where we establish all of our rankings that tackle trading from the broad market to the individual components of the broad market, that's the S&P 500. And when you're looking at the S&P 500 right now, yeah, it doesn't have the nasty chop that the NASDAQ has, and it doesn't have the swift potential reversal characteristics that the Russell 2000 has. You're really looking at a fairly standard type price movement here. I don't get too concerned about the price movement specifically in the S&P 500. We really haven't violated in this downward movement in price. We really haven't violated any major support levels, guys. You got a little bit of consolidation in the 20 and the 50, and a lot of that is based on the slowing momentum of the trend that we've been seeing over the course of the last month and a half. And so you do have some consolidation in that overall marketplace, but you still have yet to violate a major support level in this downward movement in price you've seen this week. And when you're looking at that 50-day moving average, yeah, we've had some volatile tests of that 50-day moving average, but it has been a fairly decent buying the dip type type mechanic over the last couple tests of the 50-day. We're getting a hammer candle on the 50-day right now. Now, if you look at the intraday, about 30 minutes ago, Tyler and I were breaking down the intraday chart before we were getting into the halftime show here today. And I think, and I don't want to put words in your mouth, Tyler, but I think both of us were looking at that 38.80 level, and kind of like you said earlier today in the show, if you were to ask me that question 2 hours ago, I might have had a different response. But the market responded very, very positively coming after the cash open, took the punch, and then it was setting right underneath that test of that 38.80 level, which over the last couple of days in the market has been a very, very significant intraday support level. It was testing that level, got back above that level, and I do think if you can maintain that 38.80 level coming into the close here today, I think you're going to have a different read on the market coming into the end of today than you did when we all woke up this morning being like, come on, can we figure out what's going on with this ship? Really, you can buy a Tesla with Bitcoin converted through NFTs, but we can't get a ship out of the Suez Canal? Really? Seriously? This is what's kicking the markets behind. So yeah, the market can be fickle, and it can, like we've said many, many times, you want to talk about the biggest flip-floppers in the world? It's traders. They can go from 2 hours ago saying the end of the world is happening to, hey, let's all buy the dip and go get rich. So we're kind of in that mentality right now, and it's a little nerve-wracking, but we do have some fairly decent technicals to kind of give us a little bit of a barometer and a foundation where this market can go for the rest of the week.
Yeah, it is funny how we are flip-floppers by nature, by trade. We're actually trained to do that. You're supposed to, when data and information comes in, you do change.
Yeah, but some traders are not, and they still do the same thing.
They're still emotional.
So, yeah.
Just like a paper bag in the wind. Like the ship.
GameStop's going to be the next Apple, and then it's going to go bankrupt, and it's literally, you're only looking at a 30-minute chart. Like, yes, we are the biggest flip-floppers in the world, both strategically and emotionally, Tim.
Yeah. Some of the early morning selling, by the way, was on PAL commentary, giving, doing an interview with NPR.
That's a joke.
But it was such a stupid story. It's
literally, a joke. Don't give it the credit.
He just stated the obvious. He
didn't even say anything. Literally.
I know.
He said, quote, at some point, we're not going to be spending $120 billion in QE. Yeah.
I hope so.
Hey guys, let's have a little moment here. If the economy is improving at 6.5%, followed by next year at 3.6%, you don't want the $120 billion going to New York banks, guys. So I hope that moment is sooner than later.
I agree. Outside of broad equity markets, I do want to move directly into the commodity markets next, because one of the big stories of the day, Matt, you did mention, is the Suez Canal being shut down and blocked by that one ship. And the images are pretty interesting. It just looks like it's wedged in there, Greg. And no, you cannot pass as of now.
I want to just have 5 minutes with the dude who drove that into the bank. And not like Jack Bauer interrogation style 5 minutes.
No, like,
I'm talking about just like curiosity,
like arm around his shoulder.
What were you thinking, bro?
So let me get this straight. The guy who ran the Exxon Valdez, he now has a new job in the Suez Canal. Is that what I'm hearing here?
No. He's just the consultant.
Oh goodness, it is blocking one of the most important tradeways in the world. They are going to end up rerouting ships. It's funny.
I haven't even seen the pictures, but I just find that so funny.
It's so dumb.
A ship the size bigger than the Eiffel Tower, Greg. In fact, I even wrote the dimensions down a little bit earlier. It's 193 wide, 3 feet wide, 1,300 feet long. It is huge. It weighs 200,000 tons, and it's now blocking the canal. And they can't get it out. And they tried, and now they thought it was going to take a day, and now it's
I'm
going to
gonna
take 3 weeks.
Give me an hour. That's all it'd take. Give me an hour.
Oh, I don't know you. I don't think you can just blow it up, bro.
If you want, don't you question my tactics. The world needs its oil. Let's go.
We can't just country bumpkin this one. We can't use our old tricks from when we were kids. It's not going to work.
I know
those same tricks. Those same tricks work when you're 43 versus when you're 3.
I know a couple of out-of-work welders from Western Canada. They'd have that thing cut into pieces in about 20 minutes. So,
well, as of now, the people working on the problem have not solved it. Oil initially bought on the news, by the way, yesterday when it hit. Now it doesn't care. It's actually just selling off again here. And really, a lot of oil traders, from what I'm reading, they're just citing, Europe, COVID concerns and all that kind of stuff. I just see excessive volatility. And I think anybody who says they know exactly why oil is selling off here or who is selling oil is probably making some guesses and some speculation.
Before this occurred.
That's right.
So
yeah. Tyler, what do you see in the chart?
Added to that volatility.
It's an ugly chart, ugly volatility. How do you read it?
Yeah, it is an ugly chart. And I read it like I read the NASDAQ. You just chill. I don't think you have a directional bias here. And remember how long it was, how many months we said there's nothing to see here in oil until it starts trending. It's a nothing burger. Hey, maybe it's a nothing burger for a while. I mean, I don't think it's going to implode, right? Like I don't think they're going to completely unwind everything it just gained since November. But kind of like small caps, it went up a lot in a short period of time. Can it settle in now? Sure. And so I think it's a similar message to what we said about the rest of the equity market. Just let it settle. I do think it's interesting today that energy stocks are bouncing back nicely. They look much better than crude oil. So
it's a couple of days of that. I mean, if you really think about it, the volatility over the last few days in oil is not seeing itself represented in the energy stocks. Not quite the same. They're off a hair, right? They're off 0.6, and they even pressed a little bit lower when the markets were lower. But crude's down 4%? It was down 7% the other day. It had a huge rout last week. Last week when crude sold off, energy sold off with it. This week, as crude is selling off, energy is trying to find a little bit of a bottom. So It's interesting note. Yeah.
Yeah. So, and Matt's been saying this. I mean, I think the play, if you're buying the dip, it's easier to buy the dip in energy stocks. Today I think proves that.
Mm-hmm. Yep. Greg, always have to ask you if you have any analysis on oil being up there in Canada. This is a commodity you track a lot. I know that you trade a lot of energy stocks as well. What's your read here on oil?
Yeah, I wish I could add something, very poignant to your conversation there, but you guys nailed it. It's a wait and see kind of thing. And I hate to do that because everybody wants an answer, but really it's a wait and see. Like, yeah, you've got some volatility here on the futures charts, which is actually good for us day traders. But for the big players in the game, the Exxon Mobils, the ConocoPhillips, they really haven't done that much, to be honest with you. They're back into that consolidation and they're waiting for this thing to work out its problems as well. So really it's caution and be prepared. Like I like what Tyler had to say. Be prepared. If we get some upward movement, they're great opportunities for that buy the dip crowd. So I really like, obviously I'm always looking for good dividend pairs and there's a few in the energy space that really fit that bill. So just waiting my time, being patient for those opportunities to present themselves.
The dollar, then Bitcoin, then I want to get into stock talk. There were a couple of companies report earnings today, KB Home, Darden, that I thought were interesting, a couple of the corporate items. And then a little bit later in the show, actually, we have a fun little segment planned with Coach Greg that we're calling Buy One, Hold One, and Dump One. And you've got 3 different ideas, right, Greg? And 3 different stocks. And
I'm so excited for this game, by the way.
I'm fired up. I'm
so excited.
Absolutely. And then we get to decide which one we're going to buy, which one we're going to hold, which one we dump. So that will be a little bit fun. The dollar has been rallying, continues to rally here today, guys. Dollar strength has not been good for markets here in the last little bit. Matt, what's your read here on the currency markets?
U.S. economy is improving faster than the world market economy is, and the dollar is going to appreciate in that environment.
Yeah, and it has been here.
Over at some point, as the dollar appreciates, you're going to start having concern in earnings reports, but we're not there yet.
Not there yet. Bitcoin next and last on market skyline. Obviously, it's been a little bit more volatile here recently. It failed to hold that level, that line that you drew.
It
up
wanted
there,
the
Tyler.
20. It wanted the 20, and it didn't get it, Ty.
It
I know, it's too bad.
Okay.
It's too bad. So short-term bearish signal, long-term still fine, but I mean, it resolved the consolidation lower, not higher. So that doesn't give you the warm fuzzies if you were looking for a reason to buy this.
Yeah.
I don't know. Every time I look at Bitcoin, I just kind of think, me and Frank, we love our breakouts. Bitcoin's a breakout instrument for me.
Can the Techno King stop talking about Bitcoin for me? Just please. Just stop, Elon.
Please, Elon.
I don't need
Elon. We know you listen to the halftime report. That's a joke. But Elon, if you are listening to the halftime report, we love you. The world supports you. Now, please stop tweeting about Bitcoin.
Please.
You're not adding to the conversation at this point.
No. In fact, he's detracting from it.
He's distracting the conversation.
Because then everybody starts arguing about this, that, the carbon footprint of Bitcoin, and whether Elon should be doing it anyway, and whether it's just side noise. I mean, the biggest news in Bitcoin over the last 2 days.
It's a clown show. It's a circus. It's a sideshow. It's not helpful for the conversation, in my opinion.
Fidelity is now pursuing launching their own Bitcoin ETF, by the way, which is, again, another story that we're going to see develop this year.
So you shut down the Winklevoss twins for 7 straight years, but it's like, okay, now let's just do it ourselves.
They're going to capitulate to all of them. You watch.
Capitulate. You think that's capitulation, huh?
The SEC?
Oh, you think? No. Yeah. Yes. You think it's capitulation? Watch these banks being charged 2% on those ETFs, and you tell me it's capitulation. Yeah.
Oh, big business.
Yeah.
All right. I see.
I think it's more on the greed side here, bro.
Yeah, they're cashing in. That makes sense too. Yeah. I mean, they fought against this for so long, though. So they absolutely, whatever it is, the reason they are going to be launching a Bitcoin
JP
ETF
Morgan tells you that they never invest in Bitcoin. Then we find out all the time they do.
Jamie Dimon lied.
Newsflash.
News here on March 25th. All right, I got nothing else to add here. Obviously, it's retracing. You've got a 50,000 technical, just kind of price zone there.
It's not dip mechanics
moving
at this
average.
point. No, it's not dip mechanics. That was on the 20-period moving average. It tried to hold it 2 consecutive days. It got blown up here today. You're not dip mechanics at this point. You're in neutrality at this point.
That's right.
Once you're in neutrality, it's not dip. You don't buy dips in neutrality.
No, that's right. You have to wait. You have to let that thing develop. All right, let's move into stock talk here next, where we go through company earnings, individual interesting reports or news that's out of different industries or companies for the day. And then we also always have some fun in our Coach's Corner that we're going to be doing with Greg here in just a minute. Matt, there's not a lot of big headlines here today, but there were a couple of corporate earnings reports. Did you get a chance to look at KB Home and Darden?
No, I didn't pull any earnings. I wasn't that interested in them, honestly.
They're not that big of companies, obviously. We're not in earnings season. I just wanted to give a couple of the numbers here. KB Homes did come out and beat on EPS, missed on revenue. The stock's battling back here intraday. They've been taking advantage of the overall residential housing construction boom here recently, and it doesn't look like that's going to change. Positive commentary out of the CEO. They reaffirmed guidance. It was a nothing burger in that regard. Initially did sell off a little bit, came back. Tyler, is there anything in the chart there grabbing your attention?
Again, I mean, I don't know how quickly it bounced, but dude, it opened at $40. It's up 10% off the lows. That's a pretty impressive rebound. Maybe it happened. Well, I got to look now. Yeah, look, I mean, it's ripped right off the bat. So you got to feel like a schmuck if you're the one who sold it after hours. That's a good bar. Yeah. I mean, the thing is, it's pretty much where it was yesterday. So this pullback pattern's in play.
And we could analyze KB Homes here, but if you're going to, KB Homes is 5th out of 5 for me when you're talking about the home builders. I mean, look at DHI, look at Lennar. Both have better technical patterns. Both have better potential breakouts, and both are fundamentally better than KB Homes.
Mm-hmm.
Yeah. I'd like to personally thank KB Homes for what they did today, because they've sent lows into the stratosphere, which is what we were looking for a breakout. So Thank you very much, KB Holmes. Good job.
That's a good strong candle on Lowe's. Absolutely. Look at that.
It is.
Held that 180. Now it's rallying off of that. Looks good. Have you been playing Lowe's here, Greg? Directionally with equity?
Yeah. So I've been watching this, since the last time this touched the 180 there. I was kind of salivating with this cup and handle setup here. And so, I've been in this trade. Well, actually that breakout 4 days ago or 3-4 days ago.
Take a look at that.
That's where I ended the trade. So
take a look on Lowe's on a weekly chart too, because you do have a little bit of a prolonged neutral pattern or trend happening over the last few months. And you're breaking out of Lowe's on that weekly chart. That's the start. That typically is the starting point of a new leg up, guys. When you have that degree of prolonged neutrality, you allow a lot of the fundamentals to catch up to the price, and then you start that new leg. You're looking at Lowe's in an environment where swing traders like the snapback test and the hold of 180. Position traders, investors are looking at this saying it's about stinking time Lowe's breaks out of 180. And Tim, you know what technicians always say, break out of 180 goes to 200, the same way it goes from 90 to 100.
180% of the time?
Yeah, that's what I made up. Yes. Mm-hmm. And so I like it. The technicals here are pretty solid from a multiple time frame analysis perspective.
Yeah, it's looking really, really strong relative against especially the marketplace. So what is Home Depot looking at? Just out of curiosity here, Ty, still
similar, just a little bit more of a prolonged, extended upward movement in price. The trade there, and Greg, seeing it perfectly, was Lowe's. The analysis on the position versus the investment, very similar on Home Depot versus Lowe's.
Mm-hmm. And then another company real quick here, Darden did beat. They came out, they had really depressed expectations. This has been a wonderful trending stock as a part of the overall cyclical type of reopening theme into restaurants. They run the Capitol Grill Seasons 52, but most importantly, you would know them for the Olive Garden franchise. That's about half of their revenue, by the way. They beat, said they're going to raise the minimum wage that they're paying people, in their restaurants, if they're hourly workers, not those tipped workers, Greg, a little bit, but there wasn't much that I saw out of there. But the technical condition here I'm interested in. Tyler, that was a retracement. Now post earnings, you got a nice hammer candle. Is there anything here?
Tough thing for me is this has been relatively choppy on the way up. Because if I'd taken this over today's high, I'd have to go intraday, because if I put the stop under the pivot, the risk reward's not going to work. So it's okay. There's probably better setups, but the size of today's candle relative to where the pivot low is makes it, I think, tricky on the daily chart to carve out a trade.
Mm-hmm. Mm-hmm. And then last one, then I've got a few downgrades here. Nike is, taking it on the chin here a little bit after coming out and issuing a report that they were very critical of what's happening in one of the provinces in China regarding labor restrictions, human rights violations. I don't know enough about the detail there to start going into that and have some real detailed take, but I know Nike did. And, they aren't actually selling on this news. There was reports out of China as well that there was some, the government and many of the social media platforms were pulling some of the Nike labeling and whatnot off of their stuff. So they're getting embroiled in some political controversy there. The stock is now gapped down a little bit. I don't see anything here that interests me in Nike. Anybody got anything? Just a big company that was in the news here today. All right. Upgrade, downgrades, a couple of them. And then Greg, I do not want to delay and I want to make sure I get it right. Buy one, hold one, dump one here in just a minute. I'm looking forward to that. But we did see a couple of interesting upgrades and downgrades. AMD, let's bring that one up real quick. AMD caught an upgrade, put them on the conviction buy ratings, and they said Northern actually upgraded them to outperform, Matt, in their industry. We just looked at the semiconductor.
They liked my reversal analysis. Thank you.
They did. Do you agree? AMD outperform against the semiconductor peers?
No, not yet. I think, but you got to give credit where credit's due. I never ever appreciate an upgrade that's simply trying to catch up to the other institutions out there. Or, I never like an upgrade that is simply catching up to the momentum of a stock price. So you got to give credit where credit's due, and an upgrade off a potential reversal type thing where AMD is out of favor with the sector, you got to give a little bit of credit there, because they're looking at an environment saying, you know what, I'll tell you what they're looking at. They're looking at that support level that Tyler has drawn there. And they're saying, you know what, AMD is a company that can fly. AMD is a company you look at long-term on a dip. AMD is a company that has, not great valuation, but is one of those darlings of the market that can absolutely fly when it finds the proper momentum. And you're at a technical environment where you absolutely could start to see the beginnings of a reversal pattern. And so I do respect the upgrade. I think we're a little bit premature, but that's more me from a technician's perspective. They're probably looking at it a little bit more from a fundamental perspective. So I'd have to dive into that, but I doubt I would agree with that from a fundamental perspective. Technical, I like the potential reversal pattern here. I still think you got to see it play out, because even on an upgrade, guys, we're still talking about a stock that basically is dojiing today. And so that upgrade was not enough to really shift the short-term bias on this stock. And so it's a positive storyline, and it's certainly going to help in that technical reversal pattern, but we got to see it first. Let's see AMD, now that it's on the radar, right, from the other day. Let's see AMD hold support at 74 in this downward movement in price. Let's see how it retraces back into 80 and retests that 80 level, which is in that just 29 and the 200-day moving average, all right into that 79.80 price level. And so I definitely believe AMD is on the radar for a lot of traders out there, both from a short-term perspective, but more importantly from a longer-term perspective. But because it's more in that longer-term perspective, I think we can have the patience of time to let this reversal pattern play out.
Mm-hmm.
Hey, Matt, I got a question on this one. So yeah. this doji that we're seeing right now, is that an important place for you to think this should hold for that reversal? Because it would make that higher. That would make a higher low just from a really short-term standpoint. The only concern I have with this is we're looking at all those moving averages, and it appears, I think that's 20 looks like it's going to cross the 200. Yeah. I'm actually seeing an inverted cup and handle here that would, like I said, that 74 has to stand up solid for sure.
It's got to hold.
If it doesn't, you've got a long way down. So
yeah, to me, it's not just, you're not looking at this as a, hey, if 74, 75 holds, let's buy. No. Right. That's what you got to see for the reversal pattern to continue to work out. This isn't a buying position, in my opinion, until we see it retest the 200-day moving average, which coincides with that 80 price threshold. That's right where the downward moving 20 period is, which is going to put pressure on AMD's price. There's no doubt about that. AMD most likely is going to have some fairly significant test of that 74, 75 threshold. And so, yes, you're in the zone. And I believe AMD's low price today literally was in that 75 zone. I think it was like 74.96. And so, yeah, you're in that zone of that support level. And so, but for me, it really is the retest of the resistance level of the 200-day moving average, and then seeing the price action, how it behaves at those, as it does test those cluster of moving averages. I think that's going to be another important test. If all of it works out based on AMD's price, cycle, you're still talking a week, maybe even 2 weeks of data before you have enough to really confirm this reversal pattern holding. And again, when you're talking about longer term style investing and trading, when you're looking at 200-day moving average support bounces, typically, guys, I know everything's been V-shaped in the last year, but typically these things do take time to really play out. And V-shaped recoveries, like nobody really loves them. They really don't. They love standard technicals, retest of support, firmly establishing those levels, making sure that we have confirmation. All of these types of technical events take time. That time adds up to 1 to 2 weeks at the best case scenario. So I certainly do. I don't agree with the upgrade, but I respect it because it's in that zone. And for me, seeing another 1 to 2 weeks of how AMD really kind of solidifies that support threshold, retest that resistance, you could certainly see AMD over the next quarter outperforming the SOX index. But again, I think we're premature there.
Yeah, fair enough. I think that's just, sorry, Tim, I just think that's a great point. You know what I mean? Some folks, and maybe not the ones in our community, but some folks, they see these upgrades and then the first uptick, they want to jump right in and that can cause you a little bit of pain. So I think it's really important to watch those round numbers and those moving averages and all that. I think that was a great point by you.
Well, think about it, Greg. That upgrade was headline news, right?
Yeah.
But yet we have lesser volume today so far than we typically do, and all it did was stabilize the price. And so I do think it adds to the conversation, doesn't take away from the conversation, but we still need time to let this play out.
Yeah. Fair enough.
One or two more other upgrades, then we're going to play that game. Let's take a look at Cisco here, CSCO. And actually, Goldman Sachs upgraded Cisco to buy from neutral here. I'm going to start with Tyler. Tyler, do you agree on this Cisco upgrade? Do you see it as a buy?
Here's the thing. Here's the thing about this game. Like, what's the logic? I mean, because if I look at this from a technical analysis perspective, if the last time you talked about it was last November, sure, you should upgrade your outlook. It went from below all its moving averages to above all its moving averages, right? The long-term, intermediate term, and short-term trends have all reversed since last November. So I think you have to upgrade it if you're following price.
I'll give you their logic. Their logic is simple. People are going to go back to work. They're going to get back in the office place, and they see it as a reopening theme play in that vein. So they think it fits the cyclical narrative, actually.
Okay. So, yes, I agree. And the chart confirms that.
Matt?
If I were an analyst, Tim, I'd say we're upgrading Cisco because the chart said so.
They don't always cite those technical analysis conditions that we always break down and analyze, which is why we kind of go through them as well. I don't see it as a buy today or on a trade, obviously, but it has been strengthening recently. I mean, I can't fight the upgrade. Anybody else got anything on this one?
No, I mean, if you like communication equipment in the technology space, there's only 5 stocks in this space in the S&P. You have Cisco, you have MSI, you have ZBRA, HPE, and JMPR. And so when you're looking at Motorola, or when you're looking at Zebra, or when you're looking at Hewlett Packard or Juniper, you're looking at an area of the market that has been trading with the cyclical movement since November. And so you could definitely see that argument play out. Technically, Cisco's not my favorite, but they're probably looking at a little bit longer term. You know, when you're looking at it from a technician's perspective, I don't have a problem with the buy rating on Cisco. It's breaking out of 50. It's trending bullish. I don't have a problem. It's a tough stock to trade, right? So if you're looking at it from a trader's perspective, I like HPE a little bit more. From the trader's perspective, you got a little bit of a bullish retracement with confirmation here today. Cheap stock retesting the old resistance breakout channel, and so it's catching a little bit of that. You know, this is how an upgrade works. You upgrade a different stock, and then the industry gets the price action, right? AMD was just it stabilized. This actually had an impact here. I like HPE here from a potential trading perspective. I don't got a problem with the upgrade on Cisco though.
Yeah, me neither. All right, guys, that's the news here for today. What we're going to do next is we're going to play a game, and we love games, Greg, in general, but also here on the show. We like having a lot of fun while we're analyzing stocks and breaking things down and whatnot. So we're going to play buy one, hold one, and dump one, and that is dictated based on the 3 different stock ideas that you have brought to us. Greg, you're up, man. Go ahead and get started.
Yeah, so this was inspired obviously by the marry one, shag one, kill one game there, and just thought we'd trying to tune it into some stock plays here. So I've taken three fundamental stocks. I've done a little bit of looking into here. We'll look at the chart. We'll look at what I got to say about each one, and then you guys tell me what you think. Which one are you holding? Which one are you dumping? And which one are you buying more of? So, all right, we're going to start with KHC Kraft Heinz. You can pull that up for me, Ty, man.
Okay.
So technical read here. I'll let you guys go through that. That's pretty well your area of expertise. As you're looking at it there, I'm going to go through the data that I got on it. So you're looking at about a 4.2% dividend yield Their first dividend was paid in 2015. Right now, their payout ratio is 552%. And they've had 0 dividend increases recently. They actually cut their dividend in 2019.
I know you've done this before, but explain the payout ratio. 552%. What does that mean?
So the payout ratio essentially means it's how much of their earnings they have to take to pay their actual dividend. So if it's over 100%, it means all their earnings are going to pay the dividend. So in this case, they're 552% dividend payout ratio right now. So what that means essentially is they got to take a lot of cash that they've got lying around to continue to pay that dividend.
Mm-hmm. Okay.
So that's KHC. I'll give you the next one. So I'm sure you'll love this one, Tim. Verizon's next up on the docket here. So Verizon,
right.
little W pattern there. So Verizon, we got 4.4% dividend yield. 1984 was their first dividend payment. Payout ratio of 58%. They've had 16 years of consecutive dividend increases and no dividend cut recently.
And we'll analyze all these technically once we get all three and then start the conversation and kind of go through the analysis at that point. Okay. So you've got Kraft Heinz to start. Yeah. You've got in the telecom services, a dividend paying giant, Verizon, like you talked about. And give me those dividend numbers one more time, because they did grab my attention.
4.4%. 1984 was the first dividend they paid. Payout ratio of 58%. And 16 years of consecutive dividend increases and no dividend cut recently.
Okay. And then Kraft Heinz, what was the actual dividend rate? That's the only number I didn't write down.
4.1. Yeah, 4.19, 4.2%.
All right, third. What you got third?
All right, Leggett Platt. So LEG. We're looking at a 3.6% dividend. First dividend paid in 1939. Dividend payout ratio of 88%. 26 years of consecutive dividend increases and no recent dividend cut.
So consistent dividend payer for decades and decades. They do increase the dividend over time, and they have not cut it in a very long time, is what I'm hearing. Is that right?
That's right.
What does Leggett
hold
Platt
one,
do?
dump one.
What do they do?
Furniture, textiles, things like that.
Yeah, they're a cyclical company. Furnishings, fixtures, appliances, those type of things, Tyler.
Okay.
Yeah. All right. Well, let's start with technical read here, Tyler. I'm going to have you go first. Run us through the charts. Tell me what you're seeing here between these three. What do you think of Greg's, different candidates here, just from a technical perspective?
From a technical perspective, Kraft Heinz is coming around. So we'll break it down multiple time frames. Your weekly chart on Kraft Heinz, this has put in a bottom on the weekly chart. So if you view Wall Street's sentiment through the perspective of price, they are warming to this stock. Got destroyed in March of last year, which, what am I saying? It's been destroyed for the last 3 years, right? It's a $100 stock at one point. But you've taken out some long-term weekly resistance levels. So if you said, hey, I like the discount, I like the company long-term, I need to see the longer-term trend turn around, you got some strength here. I mean, you could build a decent technical reason to buy this thing on the daily. Mm-hmm. Not my cup of tea, but chart looks fine. Daily chart's fine. It's been trending higher this year. Holding up well over the last couple of weeks. That, a lot of these dividend-paying safer stocks have kind of ignored what's going on in the rest of the market. So good relative strength in the short run on this one.
Greg, one of the things I like about this segment is that you do bring different kind of analysis, 3 dividend-paying companies, old money style, because you like that. That's something you're looking for specifically in your investing. KHC, obviously, from a technical perspective, I don't see a swing trade here, but we're not really talking swing trade. That's not the analysis here, right? This isn't whether or not you would swing trade or not. It's more about a position trade or a longer-term time frame, I believe. KHC is interesting.
Buy one, hold one, dump one as a swing trader game would be literally, we would prove the flip-flopping argument very quickly.
That's right.
This is obviously a longer-term game.
Longer-term game. Okay, so the KHC chart. What about that, Verizon chart, Tyler? Anything in that chart that grabbed your attention?
As far as Verizon goes, I actually had Verizon in Trade Masters last night. for a poor boys covered call. So good on you, Greg. Good pick. I like the relative strength. Look, when you get in the realm of like high dividend paying stocks, you've kind of exited the realm of good swing trade candidates, great looking momentum trends, and now you're like more instability. So when you look at the long-term chart of Verizon, it's like, what? I mean, what you want to do? Swing trades on this? Like, it's not a swing trading stock. It's a stable stock. I do like. I'm on a 5-year chart. I do like how it's held $54. It's above its 200-week moving average. It's showing stability. It's showing quite a bit of stability here. Holding up well in the short run over the last couple of weeks. It's been a safe haven. Some of the money coming out of these other areas has gone into Verizon, and I like it on a breakout over 57.5. So one of the reasons I brought it up in last night's Trade Masters is because in light of the messiness in the rest of the market, I think a safety play, something more stable, it's easier for me to pull the trigger on something like Verizon than it is to go try a swing trade on some bullish random stock. So I like it.
All right. And then last, the technical read on Leggett Platt, and then we'll play the game.
Leggett Weekly is kind of a mess, not going to lie, kind of a mess. But it did have a weekly breakout 4 weeks ago, retesting that. So I think as long as it's above 45, you got to like it. Gets back below 45, then it's kind of a potential failed breakout on the weekly chart. On the daily, yeah, it's not bad. It's not bad. It's high. It's above all. It's all above the 200 and the 50. I think if they buy this dip, sure, it's decent.
All right. Well, now let's play. Who wants to go first?
I'll go first
because I got my picks. I think I'm dialed in as well. So you go ahead, Tyler. You go ahead.
But buy one, hold one, dump one, right?
Mm-hmm.
This is easy. Okay. And if anybody doesn't, whoever doesn't agree with me says more about them than me. Okay. Let's just start out with my confidence that way. I am buying Verizon. Its first dividend payment was the year I was born. Okay. So Verizon decided to celebrate my birthday in 1984 by starting to pay dividends. They've done it every year since. And I own some Verizon. So Verizon is the one I'm buying. Am I divulging all three or just one at a time here?
I don't know. First time we're playing a game. I mean, we could.
Well, you got to go. You buy one, hold one, dump one.
I think you got to do all.
Bam, bam.
Bam. Yeah.
So I'm buying Verizon. I'm holding Leggett because they've been around since 1939. And their payout ratio is way better than KHC. And 26 years of increases. They're like the old dog of this list. I think you hold them. And KHC to me is the obvious one you dump. A 552% payout ratio. That scares me a little bit. And the dividend's less than Verizon. And they just cut the dividend in 2019. So from a health perspective, that's the unhealthy one. I don't want to be contrarian. I dump that one.
Okay. I'm on the
You're welcome. Game over. I won. Let's move on.
Well, let's think through this. I'm going to go completely in a different direction as you, Tyler, actually. And I want you to give me a longer term chart as I give a little bit of some of the. And we are back here. Hopefully we're going to be getting our audience coming in here slowly. I'll even post a message in the other thread shortly. We were playing a game of hold one, dump one, and buy one. And apparently Zoom and YouTube did not like that there, Greg. And but we are launching the show back to kind of continue the conversation. Greg, we decided to play this game each Thursday as you're coming here on the halftime report because you've got a good long-term view of the markets. You've got a good eye when it comes to dividend payers. You bring a different style of analysis, and we wanted to have some fun around that, kind of showing the old money mindset, the old money attitude. Explain where we're at, Greg, and kind of just talk real quickly about the three stocks, just kind of reintroduce them, and then we're going to resume our game. Okay. So just kind of run us through those three stocks again.
Yeah. So we just picked up, three more position trade than swing trade candidates. Just kind of looked at the fundamental analysis, also looked at the chart, and basically playing the game, marry one, shag one, kill one. We're going to do buy one, hold one, dump one. And just kind of, you can use whatever metrics or whatever reasoning you want to use. That's kind of why we're playing the game, is to see what everybody thinks. So we had KHC as our first one. So KHC, I'll just run down their numbers real quick again. 4.2% dividend. 2015 was their first dividend payment. Payout ratio 552%. 0 dividend increases, and they actually cut their dividend in 2019. As we looked at the charts, they're breaking a weekly support or a weekly resistance, et cetera, et cetera. So, looking good from that standpoint. Next up was our friend Verizon, about a 4.4% dividend. 1984 was their first dividend payment. Payout ratio of 58%. 16 years of consecutive dividend increases with no dividend cut in recent vintage. Finally, we got Leggett Platt. Leggett Platt, about 3.63% dividend. First dividend paid in 1939. Payout ratio of 88%, 26 years of consecutive dividend increases, and no recent cut as well. So there's your 3 candidates. You want to buy one, hold one, dump one. Tyler went with dump KHC, buy Verizon, and hold Leggett Platt were his choices up front. And now to you, my friend, Tim.
Absolutely. And Tyler may not be able to pop back in here. It's giving him some weird message in Zoom. So we've got his choices already. And he also proclaimed victory somehow prematurely. Didn't know how he
Tyler
did.
does.
That's what
I was going to say, he does that every week on Trade Masters before we even put in the picks.
Yeah.
So.
I'm actually going to go in a different direction than Tyler did. I'm going to say hold Verizon. I think it's it was the number 2 pick I had for our portfolio from the podcast we did about a month ago, Matt. Obviously, we've talked a lot about how probably I did reach for that, but I liked having this stability. The dividend pair has got a wonderful history around that, like Greg has mentioned. That's the type of company I want in my portfolio if I'm looking for dividends and consistency. So I would say hold Verizon. I would add and buy KHC. And one of the reasons I would add and buy KHC is I love the longer term developing trend reversal on this chart. And I had some concerns about Leggett Platt. I'll get into it in just a second. But with KHC, I like that pattern developing. I like the type of company, packaged food company. Coach Mark even mentioned to me the other day, he's very interested in packaged foods this year, likes the trend that he's seeing in the industry. Leggett Platt, I'm concerned about. Only one real reason. Their actual EPS has been going down for 5 years in a row outside of 2019. They're making less and less and less money, Greg. And I know they have recovered here in the last 12 months. They've picked back up. But that just brought them back into the longer term range they've been in since 2015. The stock really has not done much. And there's Tyler popping back in for about 6 years. And so, yeah, dividend pair, I don't necessarily have any problem with it. But for me, I'm dumping it. Get rid of it out of these 3. Hold Verizon, buy KHC, dump Leggett Platt. That's my choice. Nice. Maddie, what about you?
So we're playing buy, hold, dump, right?
Mm-hmm.
I'll start with the dump. I disagree on KHC. I see it technically, and I understand it technically. You're looking at that long-term reversal with confirmation above 35, and then you got the hesitation with the potential trigger above 40. Technically, KHC is fine. Fundamentally, this is a garbage company, a fundamentally garbage company. And that's my opinion. But when you see a value stock with a 183 current PE ratio, with a forward projection P ratio of 14, I'm sorry, that's disgustingly grotesque as a fundamental company. And so you're taking on significant risk in putting your money and parking your money in a terrible company when you could go buy Conagra Foods, which is a fundamental darling in this space. So KHC, if you're still holding, you should have dumped and you should take advantage of it from a long-term hold. There are better plays, in my opinion, in this space. Next, let's talk about the difference in the hold versus the buy. Leggett Mason, I do agree with your concern fundamentally on the EPS with Legg Mason. However, when you're looking at this and when you're looking at the space, it's one of the leaders in the space. It also has a fairly decent technical pattern where you're breaking out of a long-term resistance and you're retesting that old resistance as new support on LEG, which I kind of like that. It's fairly volatile, but you got to like the snap back into 45. It is a buying zone for those longer term position type traders. Also, fundamentally, you're not talking about a stock that is completely overextended. Again, looking at KHC, you got a current 183 P ratio on a food processing company. If they get it perfect, they're still overvalued. And so for me, you're starting out with a better fundamental valuation on leg. You get a little bit of a better position in the space. So I would say, and you've held through the garbage, and you basically finally got an opportunity where you could get back up to 55. I like that a little bit more, so I'm going to hold Legg Mason. I love the Verizon long term here, though. And so you got to love the 200-day moving average. Saw Tyler's analysis. You get back up above that 50-day, the 20-day. You should have some good price appreciation. The most consistent dividend payout of these three. And what we're talking about, a company that does nothing, that's boring, and yet it's still up 100% in the last year, and it still pays a dividend, and it will continue to pay you a dividend. And even if it goes neutral for the next 10 years, you're going to make more money on the cash flow through the writing of the covered call, compounding the dividend, than either one of KHC or Legg, in my opinion. Verizon's the top shelf here. It's a buy on Verizon, a hold on Legg, and a dump on KHC.
Mm-hmm. Preach it, Matty. Preach it.
I know you and
well done.
Greg,
Tyler was right. Listen, Tyler was right. He said the game was over when he gave his analysis.
Whoa. Let's pull those reins in. So I threw a bit of a red herring in here, because the dividend information on KHC isn't actually quite complete. KHC became a different company in 2015 when they got taken over by 3G. But before that, they were Kraft and Heinz separately, and Kraft at least was a rock star dividend payer for since longer than I've been alive anyway. So there's a bit of a red herring there. That company has definitely had its challenges from a value standpoint. Your price point is low. It's starting to work through those challenges. I think from a future perspective, you look at the fundamentals. Matt kind of had some good points there, but there's a couple of points that I look for that make me think it will be okay long term. Product wise, people are still doing the Kraft Heinz thing. They're eating Kraft dinner and they're buying ketchup. Let's be honest. Okay. Second of all,
but they don't got to buy it from Kraft.
but they still are.
They better they better sell a hell of a lot of those ketchup packets, bro, because Kraft Heinz. We're analyzing the fundamentals of Kraft Heinz like it's a growth stock and not a food processing company.
Hey, this is tackle trading. We got Heinz Field, we got football in Pittsburgh, and we got Kraft owning the Patriots. This is all
we're
about
definitely
football.
Blue collar. I get that. We are definitely Kraft Heinz, but we are not their fundamentals.
The other fundamental thing that makes me think that KHC is going to be okay in the long term is the fact that they've got twice as much in assets as they do liabilities. So they've got 100 billion in assets, and they've got 44 billion in liabilities. So even if you close the company tomorrow, there's a boatload of cash there, ready to take on these storms. I don't like the fact that they cut their dividend, but having seen that dividend payout ratio, it's understandable. I looked at another website, and actually that dividend payout ratio, that 552 was old data. That was before they cut their dividend. They're now down to a respectable about 64%. So that does change things a little bit. But for me, I'm buying the KHC. I like the potential of it. It was $100 stock. It's 30 whatever now. I'm going to buy that one. Going to hold the Verizon because I already own it and I love it anyway. For all the reasons, it's probably the strongest of the three as far as I'm concerned. Leggett Platt, yeah, great dividend payer, but as kind of, I like Tim's analysis there where, their metrics just haven't been rising the way I'd want them to. And if you held a gun to my head, which is kind of what this game is, I'm going to dump the Platt, hold the Verizon, and load up on the KHC.
I think Greg just said I won. I think that's what I just heard.
Yeah, pretty much. I won, and I at least waited for the analysis to get done.
Hold on. If you guys consider a win buying a company that has to get it right to the level of Tesla from a growth, but we're talking about a food processor company, then you guys win.
Can we play buy, dump, dump?
Buy, dump, dump.
I think, Verizon's the obvious play here, out of the three, obviously. Eli said something funny, got me laughing in the chat. He says, I got diamond hands in all three. And Eli, I don't think these aren't the kind of
game,
companies
Eli. That's not the game.
Need diamond hands on. Obviously, the Reddit meme hold the line kind of comes in.
That sounds like how Tim plays Trading Justice podcast games. That's not the game.
Diamond hands. Oh, too fun. Greg, thank you for bringing some of these picks here to our show today. And, I love talking, a little bit different angle. The dividend stuff that you do, it's one of the first things I think about whenever I think about Coach Greg. This is an area of the market he absolutely lives in. So I appreciate you, Greg, as always. Guys, Gino has graced us with his presence here.
Hey, guys, I just want to remind everybody real quickly, we have a cash flow club tonight, 8:30 Eastern. We had a great lounge this morning. And tonight on the cash flow club, if you want to come, I have a gift for you. I have a fintech watch list I'm looking at. Last year it was 5G. We killed it. Year before was cybersecurity. Completely killed it and still are. Let's see how we do with the fintech watch list. It's the buzz on Wall Street right now. I'm going to show you how to screen for the winners in there on the portfolio. I already have it built for you, 50 of my top picks. And Greg will probably come in someday and give you his favorite dividend pair of all those. And we'll go from there. But yeah, fintech going forward for the rest of the year on is going to be a subject that you're going to hear a lot of. Tonight, I'm going to show you how to build that watch list and be part of your daily routine. Hey guys, I got to run.
Thank you, Gino.
Thanks for popping in, Gino. Looking forward to the Cash Flow Club. Eli asked, where can I catch the Cash Flow Club? That's a webinar as a part of our pro membership services, Eli. You'll be able to launch it directly from the events page on Tackle Trading. There's several different places that you can go find this kind of stuff. It's also in the menu up at the top of Tackle Trading underneath the shows, I believe. You can
right
find
here,
Cash
Eli.
Flow Club.
For any pro member, you just go to the shows, go to Cash Flow Club, and not only can you get the previous editions of the Cash Flow Club, because we do archive all of our pro member nightly shows, not exactly the Traders Lounge, but we do it for all of our nightly shows, so you can get access to all of those previous versions of the Cash Flow Club there. But you can also get access that link through the shows, and you can also do it through the Trade Center events calendar. And so for the pro members out there, I'm sure you guys are very familiar with the events calendar, but you can get access to the links for the shows through all of the events calendar. So definitely bookmark the events calendar, because that's where you can find all the links for the pro members.
Looking forward to it. I saw Marky pop in. Mark, how you doing?
I came in to pitch the Cash Flow Club tonight with Gino, but my goodness, he did it. I mean, I can't beat that. Cash Flow Club tonight with Gino.
Gino graced us with his presence, and it shut down the entire technical universe.
What happened?
It shut us down.
There was a massive surge of Gino.
He shut us down. So
we couldn't handle this.
He did a fantastic job pitching the coach's show simply by shutting us down.
That's right.
It was fantastic.
Mark, I understand there was some controversy in Trade Masters last night again.
We
had
to
go to the vote. Is that what I'm hearing?
I did. When I went to the audience vote.
Wait a second. I can see Mark right now. He's doing like a little mic challenge, right? And he puts his hand over Tyler and says, "Hey, audience, make some noise for Tyler if you think Tyler Craig won Trade Masters." Yeah. And then he says over Frank, "Make some noise if you love Frank Martin."
Yay!
See how this went down.
I want to find out. Hey, there was 2 votes for Old Money Homes on Trade Masters last night, and he didn't get any love at all. What the hell happened there? I saw that in the chat box.
There were 2 votes for Greg. He wasn't even there. That's funny. Right. Well, Tyler,
there's one guarantee: no matter who wins, there will be controversy on Trade Masters. But
hey, man, we want it to be close like that. That means there were good picks, good analysis throughout the show. But Frank did win. Is that right? Is that what I'm hearing?
Yeah, he did.
Wow.
He did.
I do love Frank's competitive spirit, though, at the end. Well, I think Tyler won. He's amazing. I love him. Great picks, Tyler. Well done. I'm going to trade your picks and not mine. That's how good you are.
Deferential, not a bad way to win a contest, actually. Coach Frank, good job. We'll hear from Frank tomorrow on our Friday show. By the way, he joins us each and every week. We'll get an idea of what his picks were. We'll also run through full market analysis again. Yeah, we had a little technical glitch there, guys. Thanks for popping back in. Those of you who could make it, we'll get this all cut up together. But we'll be back tomorrow, same time, same station for tomorrow's halftime report. Have a wonderful rest of your Thursday.